everyone. I'm Shannon Kelly, Social Media Manager at the Toronto Real Estate Board.
And I'm Jason Mercer, the Toronto Real Estate Board Senior Manager of Market Analysis.
Now, Jason, on Toronto MLS in July, it looked very impressive. And going forward for the second half of 2013, do you think we'll have the same high level of activity?
Definitely, Shannon. If we look at sales through the Toronto MLS system in July, we saw over 8,500 deals entered into the system, and that was up by about 16% in comparison to July 2012. One of the key factors here is that we're a year removed from the stricter mortgage lending guidelines that came into effect, and so some households that had initially put their decision to purchase on hold are moving back into the marketplace and are getting deals done. And even with the recent uptick in fixed mortgage rates, we're still seeing an affordable home ownership situation in the GTA, and this has been very beneficial.
So Jason, when you say affordable, how do we define that at the Toronto Real Estate Board? How do we measure that?
So we start with the notion that the majority of home buyers are purchasing a home with the use of a mortgage. And so with that in mind, we look at the average price year to date in the Greater Toronto Area, take the average 5-year fixed rate mortgage and calculate what those mortgage principal and interest costs will be on top of property taxes and utilities, and look at what share of the average household income today in the GTA is going towards those major home ownership payments. And what we find year to date through July is that share is still well within generally accepted lending guidelines and still well below the 39% ceiling or threshold set out by Finance Minister Jim Flaherty with the stricter mortgage lending guidelines that came into effect last year.
So Jason, obviously one of the main determinants for affordability would be price growth. So what did price growth and price level look like for July?
Right, well, we continue to see strong year-over-year rates of price growth across most housing types, especially in the low-rise segment of the market, which was the driver of overall price growth. So we saw the overall average price up by about 8% to over $513,000. And so the bottom line is that tight market conditions in the low-rise side of the market have been the driver of price growth, but at the same time we are starting to see an improvement in the condominium apartment segment as well, with price growth on a year-over-year basis above the rate of inflation.
So with this in mind, the outlook for the rest of 2013 for price growth still would be positive.
Absolutely. We're expecting to see tight market conditions remain in place, sellers market conditions, and that'll continue to see price growth well above the rate of inflation. And as we move into 2014, even if we see some more supply come online, we're still expecting to see enough competition between buyers to see price growth above the rate of inflation, just perhaps not by the same amount as what we saw in 2013.
Now, it'll be interesting to see with the last month of August before school starts again, what this month ends up looking like, and we'll be back with you to discuss that in 1 month's time. But in the meantime, you can still follow us on Twitter at TREB Home, as well as on Facebook. And from both of us, have a great August.
Brought to you by GTA Realtors.